I was the first to tell you that Zomato would be buying out the 10-minute delivery startup Blinkit. And we at ET now understand that for this amalgamation, you could see a 7% equity dilution when we talk about Zomato.
Welcome back. You're watching Buy Now, Sell Now. It is time to start taking viewer queries. Quite a few of you have already written in. If you're tuning in for the first time on any one of our platforms, you can send us a message on any of those social media platforms or indeed on the WhatsApp number that is flashing on your screen. Do tell us your name, the stock that you'd like to know about. If you've bought the stock, tell us what level you bought at and how long you'd like to hold it for. The first question we're taking today is from Shashi Sharma, and Shashi is writing in from Hyderabad. He's asking if Reliance Industries is a good bet for the long term. The question is for you, Rajesh, because on the fundamentals, quite a diverse set of businesses that Reliance Industries is present in, and also there's some talk, I don't know how far away it is, of unlocking value in some of those businesses. Should a retail investor buy at this point though?
If one is holding for a longer term horizon, by long term I mean 2 years, 3 years down the line, even more, it's one of the safest best, I would say, highly undervalued. The oil to chemical, from oil to chemical, it has moved into retail, geo, and these kind of subsidiaries, the retail and the geos are having a huge lot of value. And once this value unlocking takes place, it would be a huge upside for the market cap of Reliance as a whole. As far as value unlocking or the issue of subsidiaries coming in the near future, I have my doubts. It has to be given some time. The numbers have been very good. The kind of crude prices we have seen in the recent past, the GRMs are going to be very impressive, I would say. And as far as retail is concerned, we have listed peers. We were having total number of 800 stores, and this company is adding 800 stores per quarter. So I think it's a very good buy. Go for it. Don't look at levels. If you're long-term investors, every price is a good price.
All right, the next one is from Muthu Palani, and he wants a view on Neogen Chemicals. He's saying that he has 250 shares at an average price of 1,400 rupees per share. Kunal, he wants to know whether he can average at these levels. I know it's a recently listed counter, but do you have a view on this one?
So I think yes, at 1321, it's a stock which is getting into a phase of consolidation. I would suggest to hold on, and I think possibly over the next 3 to 6 months, you can look out for maybe targets closer to 1450 to 1500 kind of a range. And if you can extrapolate your time horizon to maybe a couple of years or more, then I believe the potential of the stock to come back towards its previous all-time highs of 1800 is also pretty much high. So I would suggest a hold.
Okay. You know, a group of stocks that was in focus through the pandemic was these diagnostics companies, and among them you have Tidewater. Rajesh, this question is for you. Jaspreet Singh from Jalandhar is asking about this counter. Of course, there was a change in management and all of that took place. But what are the prospects now that, well, at least we're seeing that maybe the pandemic is ebbing just a little bit?
Those days are far behind. I don't think we are going to see that kind of valuations in the near future unless, of course, COVID plays havoc once again, and God forbid, I would say that doesn't happen. The thing is, the numbers are not that supporting about the valuation. We are comparing with what the COVID era was. Now COVID business has gone. And the best part is there is huge lot of competition. We have seen Tata 1MG coming out with advertisements of 99 rupees or something like that. The pricing is going to see some pressure in the near future. So margins are going to be down. If I have to choose one stock in the entire place, there are 3 listed players, Dr. Patla, Thyrocare and Metropolis. Metropolis stands out on valuation parameters. Otherwise, I think they are going to be under pressure for quite some time.
All right. This next query that I have is from Sunita Rai, and Kunal, she wants to know the best level to enter Birlasoft. Do you think that it makes sense to look at this particular counter right now? No doubt the IT sector has seen some sort of a correction as well.
So it's seen a correction. I think IT sector has been one of the few sectors where we've seen a lot of selling from the FIIs as well. So till the time this persists, many of these IT stocks, they can continue to drag, or the rallies may be very short-lived. That's purely from a short-term play, and assuming the FI selling continues for some more time. But then stocks like Birlasoft have done pretty well for themselves over the last decade or so. The long-term charts have been quite strong. This is a time where I believe if these kind of quality stocks, if they correct 50% approximately from their previous highs, that should be a good starting point. Now the only question is that what is a better level to try and buy the stock? I would ideally believe that you can start nibbling at current levels and then wait out for a 10% to 15% of an average correction from your initial entry price. If the stock corrects to those levels, that should be a point where you can look to keep on averaging.
All right. Turning attention to the real estate space, Rajesh, this one's for you and a south-based real estate developer, Sobha Developers. We've got Pramod from Thrissur, Kerala, who's asking whether it can be bought at the current level for a period of 1 to 2 years.
See, although I am always of the opinion that real estate as a sector is not for retail investors because of a lot of issues, inventory, corporate governments and other things, and even the interest rates are going up. But as far as Sobha is concerned, I think it's one of the companies in the real estate space that stands out. And if one has a risk appetite and can hold for a longer period of time, yes, one can buy.
Okay, this one is coming in from Ajay, and he wants to know if L&T Tech can be bought at current market price with a year's view. What's your take on this one, Kunal?
So yeah, again, very similar to what I recommended for Birlasoft. You can start nibbling at current levels of 3,100. But then again, I think these are stocks where you may not get an immediate, major returns on the upside. You may get those minor rallies for 5% orders as an average rally for stock prices, but they may not be, rallies which can convert themselves into major trends for itself. So you can start nibbling at current levels, and then as I said earlier, that have a strategy in which you can look to average further at every double-digit correction, approximately 10%.
Okay, Kunal, I'm just going to take a chance and ask this. Infibeam is the name of the stock, Avenues. We've got a question coming in from Selva Pandi, and Selva wants to know about the stock was bought at levels of 20.4, and Selva says that their stop loss has already been hit. It's trading at just about 13.2. What should they do?
Well, I would recommend to exit the stock completely. I think there is no point holding on to such kind of stocks which have not done anything but then just destructed major wealth for a lot of investors for themselves. Look at the charts for Infibeam over the last so many years, and the stock has gone through a very sharp and a nasty correction for itself. So I would recommend to stay out, and if you've already bought and your stop loss is hit, you have to have a discipline in terms of respecting a stop loss. That's the first and basic ethos which you have to follow, whether you are investing or trading. So I would recommend an exit.
Okay, this query is coming from Saumitra Joshi, and this one is for you, Rajesh. It's a bit of a longish query, so let me just read it from the way he's written. He wants a view on Aavas financiers, and he would want a fundamental view and what exactly has warranted such a major fall despite strong results and such marquee investors on the list. He's asking, is there any other reason to this particular fall other than the FII selling? And if yes, please do highlight. And secondly, he also wants to know whether it is a good time to enter this counter. Aavas financier is what Saumitra wants to know about, Rajesh.
You said it right. Despite good fundamentals, it has shown a whole lot of correction. One, it was FI selling. Two, with interest rates going up, and there are fears of NIMs being contracted. Three, you have better options in the NBFC space if you are looking at investing in NBFC space. I would suggest Bajaj Finserv is a better bet in the entire space because it has a holding in Bajaj Finance, it has exposure in insurance and other businesses. So I think if somebody is looking to either switch out or add new position, Bajaj Finserv would be a better bet than Aavas.
Here's an interesting question, and probably interesting in terms of strategy, in terms of the tax outgo also. The question is actually for you, Kunal, okay? I'm going to read this out. We've got Prasant who's asking. He's got 6.5 lakhs that he invested in a mix of large cap stocks, and these include HDFC Bank, Tata Steel, SAIL, Tata Motors. and a few mid-cap stocks as well, among them Dalmia Bharat and SAIL, IRCTC. So these are all companies that are well known. The point is that because of the drop or the correction, he's making losses at this juncture. I think he believes in the long-term prospects of these counters. He's wondering whether to book losses in the near term and re-enter at this juncture.
Well, I would. So it first initially depends on the construct of the portfolio and the vision of the portfolio. Whether it's a portfolio to try and encash on the next maybe 7-10 years of the growth on the Indian economy, or whether it's a portfolio which is just about to construct, whether you're looking at for a turnaround kind of a pick over the very near term. So if it's your time horizon 6 months, 1 year approximately, then you can go with this strategy. We can maybe book out your loss at current levels and look to buy them back again at lower levels. But the only question with majority of the stocks, something like for example SAIL, Dalmia Bharat, cement stocks, metal stocks, is that these stocks have fallen so sharply over the last 4-5 months that the room on the downside for these stocks, at least over the very near term, seems to be very limited. So when you into such a kind of a scenario, it makes a lot of sense to hold patience and to hold on to these stocks. Give time to your stocks to turn around. So if these are quality names, they would be the first ones to sort of turn around, even if the sector gets into a downfall. Just to give one very simple example, was how from the entire auto pack, it was M&M which actually started off the move, and then based on the confidence which traders got into the entire auto pack, you've seen all the other stocks or majority of the stocks from the auto pack recovering quite strongly. So I think your vision, your time horizon has to be the key criteria. I would still suggest that you should hold on to your list of stocks, because I sense that most of them are quality large cap as well as quality mid cap stocks.
All right, this next query that I have is coming in from Kaji, and this one is also for you, Kunal. He wants to know whether it's the right time to enter Kotak Mahindra Bank for a swing trade. He's saying that he had already booked profits at around 1850 levels. So what should he do now, Kunal?
Well, I have a certain different view for Kotak Bank, because purely on a short-term chart criteria, the stock has been a big underperformer. So, I did this comparison for Kotak Bank almost a fortnight back when the stock was at, I think, 1800, 1850 levels. And now even when the stock is at 1660, 1670 levels for itself, it doesn't augur very well. So the spate of the underperformance for Kotak Bank is just keep on, it keeps on widening with respect to the other private sector banks. So I would suggest that you should look to switch on to other bank. In fact, the one which has been a class outperformer in the last 2.5 years, as well in the last 6-7 months of this market correction, is ICICI Bank. So it's a much better bet that you go with ICICI Bank rather than Kotak. All
right, that's the view on the banking space, specifically on the private banking space. We've got a question coming in from Naresh from Telangana, and it's a pretty open-ended question. Rajesh, this one's for you. He's looking to have an SIP approach to investing in a stock or a couple of stocks. And so therefore, which stocks would you identify that somebody can take an SIP approach in?
Depending on one's risk appetite, one should go with either large cap or mid cap. In large cap, I think Reliance, as I said, is the best bet. Reliance, ITC, Larsen, and SBI. These 4 stocks can be taken as an SIP for a period of maybe 3 to 5 years. In the mid cap space, I would say Jindal Steel and Power, IRCTC, BSE, Tata Power to be exciting. So take a choice according to your risk appetite and the large cap or mid cap space you want to be in.
Okay, this next one is coming in from Sriram. He's writing to us from Chennai, and he's saying that he's holding shares of Satin Creditcare. He wants a fundamental view on this company because he's planning to hold the stocks for the next 3 to 4 years. He's not mentioned the buy price of Satin Creditcare. Nevertheless, Rajesh, do you think that this stock is worth holding for the next 3 to 4 years?
See, I don't think one should take a call for 3 to 4 years in this kind of scenario and these kind of mid-cap names, especially in an BFC or a financing space, because a lot of ifs and buts are there. It's better to be in a large cap names like Bajaj Finserv or DFC would be a better bet.
Gentlemen, do stay with us, and viewers also do stay with us. We have to slip into a very quick break, but we'll continue to take queries after this break. Be right back.
I just heard your introduction, and what can anybody add to that?
markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Reliance Industries considering buying out the famous Revlon company. Revlon, which is in 150 countries, a 90-year-old brand, earlier this week, it did file for Chapter 11 bankruptcy in the United States.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and as promised before the break, we will continue taking your queries. So let's get going with that. And this one I have is coming in from Ravi Chandran, and he's asking about NCC. He's holding 1,400 shares, purchased at 75 rupees per share. He's holding with the view of the stock reaching a target of 90 rupees per share. Do you think it is achievable? Kunal, do you think that can he continue to hold on and aim for a target of 90 rupees per share? And should he look to average right now?
See, I think I would recommend to hold on to the stock, not to add at current levels. Now, even though the stock is trading at 54, a multi-week, multi-month low for itself, but then the chart patterns have not been exciting for NCC. At least over the last 6-7 months, the stock has been trading consistently below its 200-day moving average. But things could change for NCC if there is any major pickup in terms of the infra sector going forward. So I would suggest to hold on, maybe watch out for at least another couple of quarters, and the stock comes back towards the levels of 200-day moving average, which currently is placed at 65, 67 for NCC. But historically, I mean, going forward, it could be drop down to almost 60, 65 kind of a territory. So if the stock manages to cross those levels, and the 200 DMA is where I believe the real change of trend could happen for NCC. As of now, a hold.
Okay. Rajesh, do you have a view on the fundamentals of High Energy Batteries India Limited? It's a stock that's trading at 1325 currently, and we've got a viewer, Simran, who's writing in from Kaithal, Haryana, who wants to know about this. She's taken a position of about 1,600, if I'm not mistaken, or rather she's bought at levels of 1,600 if I'm not mistaken. I'm not very sure of the buy price, but if you have a view, please can you share it? Rajesh, this one's for you. Rajesh, if you can hear me. Okay. Kunal, on the charts, I'm hoping that you'll be able to share some bit of insight on this. High Energy Batteries is the name of the counter.
Sorry, Alex, don't track the stock.
Okay, fair enough. What about HBL Power? Do you have a view on HBL Power? We've got Simran itself who's writing about this. She hasn't pointed out whether she's bought or not. I guess she's considering.
I think it's a very good chart, HBL Power. In fact, on a YTD basis, HBL Power is up some 40-45%, but notably, the volumes for the stock is at a multi-year high at current levels. So, we've completed just about 5-6 months of this calendar year so far, and the volumes clocking at a multi-year high says a lot about the chart patterns. The prices are also quite strong in terms of the trend. The last, I think, 4-5 years have been very fruitful for HPL Power. So it just indicates that this could be a point where a new trend could begin for HPL Power. But again, just about a better strategy would be to try and buy on dips because the stock is at a multi-year high level. You would probably get those odd corrections in between, a 15%, 20% correction. Try and take advantage of that as well.
All right. Neha Toteja Kunal wants to know about Sunteck Realty. 200 shares purchased at 448 rupees per share. She wants to know whether she should go ahead and book partial profits right now or wait for higher near-term target. And the near-term that she is asking for is 1 to 3 months.
See, I'm very bullish on the entire real estate pack now. I understand that stocks like DLF, Godrej Properties, Sobra Realty are the more prominent ones, but even in the mid-cap space, the likes of Sobha Developers, Sunteck Realty, these are also very strong and exceptional charts. As such, Sunteck Realty is on the verge of a multi-year breakout at current zone. So I think 550 was the previous major high approximately for Sunteck. The stock is at 491 and it's recovered also quite well in the last 2 to 3 months for itself. So it's a stock which I would ideally believe that you should continue to hold on unless you are looking out for just about some 5-10% kind of a play. Then you can look to book out profits at 500 mark. But if you can extend your time horizon to 6 months, 1 year plus, then I believe that a bigger potential could be unleashed into these names.
Okay. Speaking about the banking space, Kunal, Bandhan Bank is the name of the counter, and we've got a question coming in from Arvind Chopra, who's writing in from Kolkata, and he's asking, he's bought, or rather, he's wondering whether the current market price is a good level to buy. Should they wait for more dips, is the question.
See, I would suggest to wait out for more dips. The only concern with Bandhan Bank was, I would say, pre-20th June 2022, when the stock actually saw a sharp fall, I think a 13%, 14% cut for Bandhan Bank on a single day. Prior to that, the chart patterns were very strong, stable for the stock price. It was trading for, above its 200 DMA for almost 2 months on a trot, previous to that. But post that, big sell of 10-13% is where the stock has gone notably under some serious pressure. And every minor rally into the stock price, a 10 rupee, 15 rupee jump is being sold into. So that clearly demarcates that the near-term trend has been damaged and you might see the stock dragging a bit lower. I would recommend a hold if it's purely from a short-term play.
Okay, this one is from Jaya Krishnan and he has Vedanta, some shares of Vedanta purchased at 322 rupees per share. He had purchased this with a medium-term outlook. He wants to know whether he can look to average it right now. What's your take on this one, Rajesh? Vedanta?
See, averaging would won't be advised at this point of time because metals are under pressure. And if you are looking at investing in metals, industry in power or a Tata Steel would be a better bet. But whatever you are holding, continue to hold. It has got a whole lot of metals under its belt. Fundamentally, it's a sound company, but adding at this point of time is not advised.
Okay. I'm sure a lot of viewers and obviously investors globally are looking very closely at the US economy and indeed those markets, Rajesh, because if there is a recession indeed that comes in, as some are suggesting that it might happen, considering that you've had the inversion of the yield curve some time back, there's a distinct possibility if monetary policy unwinding continues to take place, that there is going to be an impact on growth. We don't know whether that will happen or not. But the question coming in from one of our viewers, Neil from New Delhi, is how should an Indian investor prepare for something like this? What has the past taught us that will happen with emerging markets like India when there is a recession in the US?
See, whether the recession will come or not, it's a highly debatable thing. A lot of people are having varied views. We have to look at the first quarter CY2 22 GDP number that's going to be released on Friday, if I'm not wrong, for US, and that would give an indication how the Fed will react. But as far as the past recession things are concerned, I think there would be some pressure in the entire global market. Maybe the domestic market would consolidate for a longer period of time, but for long-term investor, these are very good times to invest in such kind of stocks because as far as domestic economy is concerned, I think it's not that dependent on how US reacts. So only FI flows are the major issues, but those were the things of the past. In the recent, in current scenario, we have seen DI is giving tough competition to FIs. So the fund flows are always there. Retail is taking care of the market. And for longer term, the stocks which were quoting at, say, for example, 2,000 rupees sometimes back, it's quoting at 1,000 rupees at this time. And that's a good opportunity to enter. I think one can, if one is a long-term investor, one can accumulate.
All right. Just before we take the next query, the rupee is once again back at the record low level. 78.70 is where the rupee is currently at. Let's move on. Let me take the next query. This one is coming in from Abhijit. He wants a view on BPCL for a short period. Kunal?
I'm not sure whether the investor has already bought or the viewer has already bought, but if he's looking to buy, I would suggest that 330 could be an immediate short-term target. The last 4-5 days, many of these OMCs are coming back quite strongly for themselves. So the price candlestick patterns have been quite strong and very bullish for these names. So I'm expecting a follow-through price uptick into these names. 330 for BPCL could be an immediate target.
All right. Vipul Birvandekar is writing in asking about Birlasoft, bought at levels of 433. The question, Kunal, is for you. What is the time frame that you think is appropriate for this kind of a holding?
See, I would recommend that you should have at least a couple of years of time frame, if not more, because these IT stocks, mid-cap IT names are at the brunt of some severe selling, which could probably go on for at least another quarter or so for these names. So these stocks can remain under pressure for the next 3 to 6 months. And I think that's where I believe that you could probably get in, these stocks maybe another 10%, 15% cheaper or lower from current levels. So, and that could be a point where these stocks may start to bottom out. And I think from there is where I believe a new bull market or a new uptrend could resume for these IT names. So you have to have a time frame of at least 2 years or more when you're buying to such kind of mid-cap IT names.
Okay, this one is coming from Arun Krishnan, and this one is for you, Rajesh. He's saying that he has 25 shares of Nazara Tech that he's purchased at 900 rupees per share. He's saying the stock is now trading at around 630 odd levels. He wants to know whether it makes sense for him to hold on to it for the longer term, given that the investor also that is present in this particular counter. What's your take on this one, Nazara Tech, Rajesh?
We are negative on this counter. We will say that any uptick would be taken as an opportunity to exit, although it has some good names under its belt for some of the games that they have on the market leaders, I would say, sector leaders, I would say, but still going purely on fundamental basis, even I think at this point of time, it's still the valuation are quite stretched. It's better to get out on any upticks.
I'm coming back to you, Rajesh, on this next one. Tidewater Oil Limited is the name of the counter. It's currently trading at just about 1,050 rupees. And the question coming in from Chirag is that he's bought at an average of 1,170. He's got a significant quantity. He's bought as much as 1,900 shares. And he's got a view for the next 3 to 5 years. What's your view on the fundamentals of this counter? I believe you're in... Yeah. You were on mute, Rajesh.
Mute?
I can hear you now.
Okay. The fundamentals are very strong. The only issue with this company is low floating stock. Otherwise, they have a good brand, good distribution channel, and a foreign investor which is looking to take over from a very long period of time. Maybe it has been a decade since this whole exercise is going on without any success, I would say. But going by the fundamentals, it's a very strong company. One should continue to hold.
The next query that I have is coming in from Jairaj Shetty, and he wants to know if Titan can be averaged at current price for medium to long term. What's your take on this one, Kunal? Titan for medium to long term, do you think now is the time to average this counter? It is under immense pressure in today's session though.
So yeah, I think for the quarter, I think the stock is down some 20-22%. For the month, it's down 11%. It's the third consecutive month down for Titan in that aspect. So the stock has fallen sharply. And when you typically see such a large cap name falling by 1,000 odd points, 700, 800 odd points, 2,650, 700 was the previous highs for Titan, and from there it's now sub 2,000 levels. So after such a correction, the risk reward is now favorable for traders to look to buy the stock. But the only question is that how much time the stock would take to try and bounce back, and whether the same amount of buyers would get back into the stock. once the rally resumes yet again. So that's the only question mark. But price-wise, I think it's a good attractive point where you can look to start chipping in.
Okay, I'm going to add to this question from Jairaj, because Shravan incidentally was also asking about Titan and fresh entry for the next 2 to 3 years. Just asking about the time frame, Kunal, would 2 to 3 years be okay?
Yeah, I think it's a good time frame for a large cap name, and that too, I think at current prices, where the stock is down some 30% approximately from its previous highs, I think it's a good buy.
All right, and with that, let's kickstart with the rapid fire. A lot of questions already pouring in. First one is coming from Sagar. Kunal, this one is for you. Asian Paints and Berger Paints, do you think these counters will give good returns at this juncture?
Well, from a risk-reward point of view, I think at current zone or maybe slightly lower, 5% lower from current levels, they could actually be a better buy.
Global Spirits, Kunal, would you hold or would you sell at this juncture?
Well, depending on your buy price, if you've bought at levels of maybe 900 or slightly lower than that, then it's a good price where you can look to hold on. But if you've bought at higher levels, I would suggest an average closer to 850.
All right, this next one. Actually, I'll request you, Alex, to take over because
okay. We've got TCS, Bata India, Tata Motors, Petronet LNG. Would you buy into these counters, Rajesh?
TCS and Tata Motors, yes. For other two, I have to wait for maybe next 5-10% correction.
Okay, Vikas wants a buying level for L&T Infotech, Kunal.
Well, as I said earlier, that probably a 4,000, 4,100 where the stock is trading for L&T Infotech, it's a good buy, but keep some powder dry for maybe another 5 to 10% on the downside.
Monte Carlo Fashions, not a counter we talk about every day. Akash from Delhi wants a view on this for fresh buying. Kunal, what's the view on the charts?
Well, current levels could be a good buy, but I think much better point would be current levels, because the stock is at a breakout. A much better level would be on retracements closer to 600 mark.
Okay, Maladi is holding Tin Plate and Himadri Chemicals, making losses on both of it. Either Tin Plate or Himadri, what should he do, Rajesh?
Book profit around 80 to 85 levels in Himadri. That's the higher levels which we are witnessing despite strong fundamentals.
Okay, question on, sorry, my bad. We've got Chambal Fertilizers. Jitendra from Pune is asking whether it can be average at the current level. He's a long-term holder. Kunal, what's the view?
I'll suggest an avoid.
Okay, and Dheeraj wants to know whether it's the right time to enter L&T or should he wait for some more correction. What's your take on this one, Kunal?
Well, I think it's a good time to buy L&T, especially if you're bullish on India story over the next couple of years. And I think at 1400, 1500 range for L&T, I think it's a very good buy range.
All right. Well, on that note, we're completely out of time on this edition of the Query segment. Gentlemen, Kunal as well as Rajesh, thank you so much for taking the time. Really insightful session today. And viewers who've not got your queries answered, apologies. We only have so much time, but we'll be back tomorrow and we'll take a lot more queries. So do stay tuned. Also, we'll be back after this very quick break with more on this program.
ITC's credo is nation first, sab saath bade.